that late model, low-hour, 1-year-old stuff, it's really kind of a unicorn, and it's hard to find. And if you find it, you need to be willing to pay for it, because the options of ordering something new right now, I don't care what manufacturer you are, it might be late 22, early 23 before you see some of this equipment show up if you ordered it today.
Ladies and gentlemen, farmers, ranchers, and distinguished guests, thank you for listening to the Farm4Profit podcast, where we discuss the latest ideas, methods, trends, and techniques available to help your farm achieve higher levels of farm profitability. The Farm4Profit podcast is co-hosted by Tanner Winterhoff, the Iowa Bankerman, and David Whitaker, the Iowa Land Guy, where in tandem they will share their ideas and advice from industry experts. Thank you again for listening to the Farm4Profit podcast. Remember, if you aren't farming for profit, you won't be farming for long. And now, here's Tanner and David.
Hey, listeners, welcome back to the Farm4Profit podcast. This is Tanner Winterhoff.
And this is David Whitaker.
I'm the banker. He's the realtor. Well, the auctioneer. The guy that talks really fast and sounds really cool. But thank you for joining us on a profit show. We're going to jump right into here after our listener review to a What's Working in Ag segment, followed by a general topic to help your farm achieve higher levels of profitability.
If this is your first time listening to the podcast, we have two different formats. One is Farm for Profit episode, which is what the Tanner just told you this one is. And then there's a Farm for Fun where we lay back and loosen the reins just a little bit. Stay tuned for both. You'll find them on the same podcast.
Yes, and we love having topics suggested to us for both formats. That's through Farm4Profit LLC at gmail.com. That's the number 4, all squished together. Farm4Profit LLC at gmail.com. You are the reason these episodes are awesome. Also, thank you for sharing it with your friends, family, and even people maybe you don't like, but you're the reason our audience continues to grow.
And Tanner, we love reviews, and this listener review is brought to you by BW Fusion. Don't forget that their fall incentive for signing up, purchasing 500 acres of Meltdown at the 401 team, and then you get a free field in 365. Now, this is only in the fourth quarter. Is that right?
Yep, fourth quarter 2021. If you pick this up in 2022, I'm sorry, you're too late.
Gotcha. So a little incentive there for the listeners. Also remember that they combine the best in class along with the 365 soil and tissue program to provide growers the tools necessary to address limiting factors in real time.
Yes, and I get to read the review this time. Thanks for leaving this behind. It was NoCo Peanut, another 5-star review. Love the podcast, guys. Keep up the good work. Thank you for your continuing promotion of agriculture. So yeah, thanks, NoCo Peanut.
That's what we're trying to do. So now one of the favorite things is our coffee shop talk, and that is what is working in agriculture today. As we record, we don't know where you're at, whether you're harvesting, whether you're midsummer, whether you're winter. If you're listening right now, thanks for listening. So what's working in ag? We have Telesense.
Yeah, Telesense. So we have the CEO and co-founder, Naeem Zafar, here. He is a 7-time serial entrepreneur, 5-time startup company as the CEO, currently serving as this co-founder and CEO of Telesense. Basically, he's creating real-time wireless sensing, has predictive analytics solutions for the stored grain industry. But prior to that, he's been the CEO of many other companies that have sold and has been residing in Silicon Valley for quite a while, Dave. This is going to be an exciting guest. Naeem, thanks for joining us.
Good to be here, guys. Good to be in the program.
So it sounds like you're a tech / maybe into farming a little bit, or do you have a big farming background? Tell us a little bit about your background.
Well, we grew up among farmers. So it's not that I had a farming background, but I knew their lives and they were friends and they were families. I'm an electrical engineer by training. So when I, did my career in designing systems and electronics and for companies like Honeywell and a bunch of small companies. So I come to a stage in my life that, let's do something useful with my life. How about helping an industry which is the oldest, maybe the biggest in the world. And these farmers, they eke by. There's a lot of profit. They work on thin margins and a lot of unpredictability. Weather, things you can't control, trade wars you cannot control. And can we use this smart software analytics to give them insights and data so they can make better decisions? Eke out a few more pennies per bushel. That's make a whole bunch of difference. So I decided to apply all the knowledge I had gained in the previous 20, 25 years to something more useful and productive, and hence Telesense.
Awesome.
That's great. So grain once harvested, never improves in quality. So that makes this grain storage management task that every farmer has a really difficult challenge. But you, Naeem, have been working on a solution for that. Tell us a little bit more about Telesense.
Sure. So Telesense is, you're going to make dozens of decisions, and often with little data or patchy data, a little bit of intuition thrown in. When do I sell? How long is this pile going to be good for before it goes from number 2 to number 3 corn?
Yep.
The best time to sell. When do I fumigate? When do I turn the fans on? When do I turn the fans off? All these decisions are made with patchy data and intuition. What we are doing in Telesense is using wireless portable sensors to collect the data automatically. So we can send you a text message, turn the fans on in bin number 2 for 8 hours starting at midnight. Because we have analyzed the moisture inside the grain, the weather forecast, the fan capacity, and what your target moisture would like to be. So we give you actionable insight, which you can take advantage of. And we have hundreds of people using it and finding it very helpful. So that's what we do. We deliver hardware and software so you can make smarter decisions and even vacation in Florida without worrying about your grain.
Well, everything's going that way, Tanner, to where, we can watch our video cameras at home, doorbells, Zoom meetings, et cetera, et cetera. You got me wondering, what sensors are we putting in the grain bin is it just moisture sensors that you're looking at or capacity sensors, or what? Can you give us a little more insight on kind of what the magic is?
Well, short answer is it's evolving. The long answer is we started with temperature only. Then we realized, well, temperature is nice, but it's really the moisture which matters. Added a moisture sensor. Then we realized, well, that's very good. But you know what will be early indicator before problem gets big and hotspot develops is CO2, carbon dioxide.
Oh, yep.
If carbon dioxide levels begin to go up and you see a certain trend, there may be trouble brewing somewhere. So we added that. Now, what about are the fans on or fans is off? Is it running? I don't know. Well, what if we add a vibration sensor or a differential pressure sensor? Then we added that. And we have a long list of other things we're planning to add, including, the level sensing, the quantity. So short answer is sensors will always being added every year. Like famous saying says, people don't like to buy a drill or even drill bits. People want to buy a hole.
Yep.
Well, that's the point. Sensor schmenser, who cares? Question is, tell me something I don't know. Is it going to save me money? That's what I care about.
I was just going to say there, Will you save me money? And that's what we're about on What's Working in Ag and Farm for Profit.
I didn't expect you to state that your app can provide predictions and recommendations. That's really cool because so what? Yep, my bin's heating up. I don't know how long to run my fans for, but it's really neat that you've got an algorithm that understands my situation, my setup, and is really going to help me manage, at least to the best available data that I have, making sure my crop stays in condition.
You got it. That's exactly right. So you got to think it, this is the fancy word for that is design thinking. You put yourself in the shoes of the user. What does the user need to know and see? What will delight the user? So you approach it from a different angle, and that's what we have done.
I like that.
That's awesome. I think it's great. Do you have any kind of estimates of clients or an example that you've used it on, or even trials of what it might help somebody save money? Is it, 1%, 2%? Is it just trying to save any penny that we can, pennies on every bushel?
Oh, there's many ways of looking at it. I was talking to one location of a co-op in South Dakota, and they said this stuff has been very useful, and they're using it in 2 piles, 750,000 bushel pile, big pile, not a huge pile, seem bigger. And they saved $100,000. That's what they admitted to, at least. So if you translate that, we typically say the cost of deploying the solution is about 2 pennies per bushel. And you should see a benefit which range from anywhere from 8 cents to 20 cents a bushel in 2 seasons. So the numbers are compelling.
Now we need a sensor just to know where propane is going to cost. Is it going to cost this much, or is it going to cost this much to dry it down? Put that in the algorithm, maybe.
Dave, we did an emergency episode over a year ago, so that would have been the fall of 2020 after the derecho hit, because we had a lot of grain storage get destroyed. this would have been a nice tool to have known about then, because we did. We put grain in places we didn't normally. It was flat storage in our machine sheds. It was piles on the ground. It was grain bags. So it's kind of neat that this is a wireless system, Naeem, that has batteries. But how long are these batteries good for?
Well, we have a couple of different types of system. One has a 5-year battery. The other one has a 1 to 2 year battery, but it's rechargeable. You charge it with the same charger as you charge your phone. So, idea is to make it simple. Now, I know you cannot see it, but I'm showing you guys like a spear. Think of that like a metal shaft.
Yep.
This could be 6 feet long, 3 feet long. All the electronics is in the little bulb. You stick it into a grain bag, into a barge, into a warehouse, and you're getting data. So depending on the vertical silo, there's a slightly different setup. But point is, if you make it that simple, you don't need an electrician. Pretty much grab it, stick it, and you can see the data on your cell phone. That's the kind of simplicity people want.
Yes.
Dave, do your best to describe what you just saw.
I tell you, guys, it looks like, I'm thinking on the top that used to be a weather vane, but it was actually not the weather vane portion. It's the lightning rod.
Yeah.
So a lot of people had a ball, like a softball size ball, and then they had a probe that goes with it.
Yep.
And that's what this is. So this is about a 1-inch probe that would go into any grain storage with a point on the end, kind of like a soil sample probe with about a softball size electronics holding plastic end to it.
I was thinking of a turkey baster.
That would be, that was much more simple than my answer.
Grab a turkey baster. That's why I asked you. I knew it was going to be entertaining. So a turkey baster, but like he said, it could be 10, 12 feet long, the probe part.
That's right.
With the electronics stored in the top. That's great, Naeem. So for our What's Working in Ag segment, we're talking about telesense. That is telesense.com if you want to learn more information about that. Do you have anything else about your product you want to say before we move on to our general topic for today?
Yeah, one more thing. What's the best idea people have had so far? And answer is, let's hang some temperature cable from the ceiling of my silo. In case there's a trouble spot, once it grows big enough, it may touch one of those sensors.
Right.
And voila, I'll know what's happening in this million bushels sitting in the pile. This is so 1990s. Because what if, these cables are maybe 10, 15 feet apart? Well, what if this hotspot develops in the center? By the time it touches you, 2.5, 5 weeks have gone by. So the new method, which we are using, is quite revolutionary. But we're saying, forget the cables. But we have fans turning on the silo. Look at the temperature, CO2 level, moisture of the air coming in. Look at what's in the headspace. And if you see the headspace, things are beginning to get warmer and warmer, or the CO2 level is going from 400 ppm, parts per million, to 600 to 700 to 1100. You got a problem somewhere in the grain mass. So you don't have to be next to a cable. So cable system is like so old-fashioned. That's my point.
Yep.
The new thing is listen to the wind, listen to the air as it moves through the grain mass and sense the difference. Software is very good at picking up minute differences and trends. So our approach is very different than anybody else in the market. And that's why this technology is promising. That's why this technology is 1/3 the cost. That's why this technology is being adopted by co-ops and large on-farm storage.
Do you have a website where people can go to find out more about your product?
Yeah, it's telesense.com.
Telesense.com.
And this new product I'm talking about is called Spider. You put a spider on the plenum, a spider in the headspace, and the magic happens in the software.
Cool.
That's great. So that was our What's Working in Ag segment, and it is now time to roll into our general topic for today. And this is fun because we've now made this a little bit of an annual tradition, Dave. We are going to attack the latest machinery and land value trends and things that have changed since we talked about this last year. So, Dave, who's our first expert today?
Well, first up on the Moving Iron podcast, so fellow podcast host out there, hosted by Casey Seymour. He's going to be on the line with us today, focuses on current trends and events in agriculture equipment marketplace. Casey goes around and interviews ag equipment dealers from across North America about what the trends are and what are other events that are facing dealers. Along with dealers, Casey also interviews biggest names in the auction industry, or not the auction industry, but the agriculture industry, rather, to talk about commodity markets, world economy, and the latest trends in agriculture business or ag equipment business. If you are in the equipment business and have interest in ag equipment business, then it's a must listen. You need to listen to this podcast, Moving Iron Podcast, and of course, Farm for Profit Podcast, our podcast.
That's right.
But Moving Iron Podcast, it can be found anywhere podcasts can be heard, kind of like ours. Thank you for joining us, Casey.
Hey, appreciate it, guys. Thank you.
And I can't let David slide because we're going to rely on David's expertise as auctioneer and realtor here for the land portion of this episode. So again, Dave's a world champion auctioneer. He grew up immersed and involved in agriculture and started his career off by attending the Missouri Auction School. And now he teaches auction school. Not the Missouri one, right? This is out in Montana.
Yep.
But one of the students become teacher, licensed realtor in many states. He's able to broker your deals. National champion, Realtor Land Institute president. Look at all this. I don't know if I could read all this, Dave, all the things that you do to give back. But now running his company with his wife, the Whitaker Marketing Group. Dave's licensed in sales in Iowa, Minnesota, and Nebraska. Currently the chairman of the board of the Iowa Auctioneers Association.
You bet.
Well, welcome, Dave.
Well, I'm here.
Oh, you're always here.
I love to talk farmland. So we got an expert on equipment. We move a little equipment ourselves, so it'll be interesting to hear what Casey has to say and move forward. And boy, markets are hot. Everybody seems to have cash all around. There's my echo for the whole start of how we're going to start this.
So, Casey, tell us a little bit about why you started the Moving Iron podcast.
I started Moving Iron Podcast probably about 5 years ago, and the biggest reason I started was just kind of like what you guys are doing. You know, it's that sharing of information across the broader platform. I think everybody has the same problems, same issues in the equipment business. You know, everyone's probably within 5% of each other, and that little 5% is what kind of differentiates everybody. But overall, the biggest reason was I started this in the downturn in 2013. 2014, 2015, started looking at what was going on in the marketplace. And I had a good group of guys that I worked with that they gave me a lot of great information and a lot of tips. And I thought, you know what, it'd be a great idea for me to broaden that out. And selfishly, I started a podcast where I could interview people and pick up what they're doing so I could use it in my everyday life. So really it's just a great place for me to go share information with everybody else around me.
I like your approach because we're doing the same thing here. I feel like I might learn more than our listeners do every week. So there's a huge personal benefit, but it's an added motivation to do it. It's a lot of fun. So you have done a lot of things here directly related to equipment. So what would you say the difference between or the evolvement between 2020 and 2021 has been on the equipment front? What would be your first broad statement?
The wide swing, I made a joke the other day on my podcast. If we had an equipment WASD report come out, our carryout would be next to nothing. So that's the biggest issue, man. In 2020, there was plenty of equipment to go around. We were liquidating equipment just like we had, since 2015. We'd done those things and made those moves and, kind of looking at what direction the market was going to go. And then lo and behold, the January report comes out and, the USDA realizes that prevent plant bends. They can't actually, that doesn't mean they plant anything. So they had a hard time getting a crop report out there right like it's supposed to be. And shot the market way up and everybody started scrambling. Obviously tractors were the first thing to go. That's kind of the first thing to happen. And then saw some trickle through with planters and some tillage pieces and so on and so forth down to where we're at today with combines. And the biggest deal we see right now more than anything is just there's an utter lack of supply, new or used, out there on the marketplace, and it's getting tighter as the months go on.
Well, we can probably end this podcast right now because I've already gotten the information that I need. Your phrase, I am going to use over and over again, the comparison to the WASD report of equipment. I think that's genius, but how accurate that is spot on. Nice. Wow, that was great. I shouldn't keep babbling over this, but how true is that, Dave?
It's very true. WASD report came out today, to tell you the truth. So the USDA comes out with that report, of course, on commodities, and not a lot of change today.
Well, I'm going to put you on the spot in the terms of a WASD report on the land side, Dave. How would you view carry out versus inventories versus demands on the land side?
So I'm a guy that loves to study the numbers. And last year overall in Iowa, so I'm going to talk Iowa specifically, we did about 686 auction events. This year so far, we still have 4 months worth that I don't have data on yet. We've done 675. So we are literally 11 auctions short, and we still have 4 months. Last year, we sold 82,000 acres. This year so far, we've already sold 72,000 acres. And I know there's enough auctions to surpass that. So there is a lot of supply out there. People are bringing to market because they're seeing high land prices. However, there's new people coming up with ideas of why they want to sell and what they want to sell, and stuff is hitting the market that hasn't hit the market before. The buyers seem to still be there.
Interesting. Yeah, that's a little bit different. It's almost an opposite scenario for what Casey described. However, you both are hinting at high priced. These are now high value assets. So Casey, on your side, is that what you're seeing on the equipment side? Are prices being driven up because of the low supply?
Yeah, if you take a look at what's going on, like the 2012, 2013, 2014 model equipment, I talk about a lot in my podcast about, that was a glut year. There's a lot of equipment got produced in those years. That price of equipment still kind of there, kind of is what it is. You're starting to see some upward movement in that market. I mean, what was $95,000 this time last year might be $97,500 now, or maybe $100,000. But that late model, low-hour, 1-year-old stuff, it's really kind of a unicorn, and it's hard to find. And if you find it, you need to be willing to pay for it, because the options of ordering something new right now, I don't care what manufacturer you are, it might be late 22, early 23 before you see some of this equipment show up if you ordered it today. So you're looking at some 6, 8, 9, 12 month, 18 month lag times to get some of the stuff out there. And it's all comes back to, we've heard this whole microchip thing and supply chain issues and those kind of things. And labor is really the thing that's driving that too, that we hear. But if you're looking for a piece of equipment and you found the piece that you want, you better be prepared to pay for it, and you better be prepared to pull the trigger very quickly.
That's an interesting thought there. I was going to echo the same thing, is that I don't think anybody can get new equipment, so it makes that old late model stuff probably worth more money. I was even wondering, as they're upgrading their equipment, some of the new stuff, of course, it costs way more than what the older stuff did, so it brings some inherent value to a little bit of light-houred used equipment to where you can't afford that new, a couple $100,000 something, but by golly, we could afford $125,000 on a late model something. Do you see that help that market as well, or is it just there's no supply?
It kind of goes back to the supply thing. It's not so much that the price increases and the stuff that we've seen across every manufacturer's platform, that really doesn't have a play in it right now, as much as it is what the availability looks like. There's just really no supply out there right now for that late model low-hour stuff. The stuff you do see that's advertised on the various websites out there, some of that stuff is probably pre-sold, or they have a deal working on that piece of equipment, and there might be 3 or 4 people deep on what that looks like. The days of let's wait till it comes into the yard so I can walk around it and take a look at it, touch it and feel it, and all those kind of things, that's kind of been put on hold. It's just the demand is there so high. And just like you talked about earlier, I mean, there's on-farm incomes higher, so you're starting to look at what's the tax benefits to doing, buying some equipment or upgrading this or those kind of things. All those things are playing into that. So when you look out there, it's just such a tight marketplace with such low supply that it's just the pricing right now is next to new on some of this late model stuff.
Okay, Dave, let's take and relate this to the land side. We have a lot more supply than we historically have had. Land coming to market, stuff for sale. But our prices continue to climb. Why do you think that is?
A couple of factors. Number one, that's kind of on a lot of people's mind. The number one thing that I see that drives land prices is commodity prices. So China has got the biggest demand that they've had, I think, in history this year. They've called for the most amount of grain to go overseas. With that demand and how much we produce, it's going to raise its supply and demand. It's going to raise the demand, and the prices are going to go up. So we've seen a rally from $3 to about $5, up to $7. Some guys were able to sell at the high mark, and then it came back down. And it's come back down, but it hasn't tanked back down.
Right.
And so higher commodity prices is jingle in the pocket for farmers that are out there. So they feel like they have a little more. Let's back up to COVID 2020. When we back up to COVID 2020, we had MFP payments, a market facilitation program that Trump administration put out. If you farm 10,000 acres or 5,000 acres and you got that money, well, that helped.
Yep.
And you maybe have some jingle in your pocket, just the way it was supposed to. And then we had PPP payments. And so PPP payments could be capitalized on top of that as well. And then grain markets went up. And so now we had old grain sitting in the bin that we could sell, and we made a margin on it because we were able to sit on that margin. So now we have three sources of income that kind of made us a little flush with cash. And then let's add something else to the table. And that's historically low interest rates, some of the lowest interest rates we've seen. Tanner, you as a banker, definitely with ag lending, know this. Where our prime levels have brought that down to where now I see guys even amortize over 30 years, pay it for 20, but amortize it for 30 just so they can get more cash to buy more land, which is driving up the land prices. And then there's one more thing, the government. And so our government and the current administration right now has had talks and threats of changing the 1031 tax deferred exchange and or the stepped up basis when it comes to capital gains on farmland. So that moves some of our investor clients in a different direction. There was talk that they were going to remove stepped up basis and remove 1031. So a lot of families thought, man, prices are high, grain markets are good, and I might have to pay more next year if I don't sell it this year. Moves more land into the market. And so that's all those things collect. We had the perfect storm. Perfect storm's happening, and it still has momentum behind it in that markets are attitude, and the attitude is strong.
I was waiting for you to use that perfect storm because that's the only thing I could think of as you were talking about that is it's not just one factor on that side of things for the land market because I'm going to get to a question about who's buying a little bit later, but I think that's going to be another factor that really helps keep these values up. But Casey, on the equipment side, is there anything that's not selling well, or is everything hot?
I think everything right now is just if it's available and a farmer needs a piece of equipment to update that. It's really about everything, especially like tillage pieces and support equipment, those kind of things. You're starting to see that kind of stuff tick up too because that stuff has been ignored for the past 5 to 7 years. So it's going to continue to even like old used grain carts getting bought as fast as we can get them in. So, I mean, it's just things like that. So really everything is just in demand, whether it's a grain cart or a combine or a tractor or a tillage piece. Everything's in high demand right now.
I had a customer that even let me know that I call them dumb planters. So the planters that don't have a lot of technology on them are even getting bought because then farmers can rebuild with the new technology because you can't order one. We'll throw some precision parts on it, or we'll go through Ag Leader and get some upgrades. Very interesting to hear that it's just hot all over.
I was going to ask you, is there any piece of equipment that stands out as the highest price change and value that you've seen? So I have one asset class. I have farmland, and there's 3 different types: high, medium, and low quality. In your business, you have grain carts, you have planting equipment, you have tillage equipment, you have tractors, you have combines, harvest equipment, hay equipment, forage. Is there a certain asset class that has raised more than any other value?
I mean, I would definitely say row crop tractors have really jumped up in value across over the last, pretty much this whole year. The one thing I have been paying close attention to, because to me, it's the combines are kind of the canary in the coal mine. You can sell a lot of tractors. That's not really a hard thing to do. You can sell a lot of tractors when you need to, new or used, and that's just a typical thing. The combines are the one piece of equipment out there that really judge the overall marketplace, right? So when commodity prices go down, combine values tank. When commodity prices come up, combine values start to trickle back up, and we're starting to see that trickle back up. I track how many machines are on the marketplace month over month, and we've seen since August we've taken probably close to 1,500 combines off the marketplace, and that's machines that didn't have a trade-in coming in. So if you really extrapolate that out, the number of combines that have been sold is probably 3 to 4 times that much when you start thinking about a trade, combine trade for a trade type of thing. So there's a lot of machines out there that aren't there anymore, and I'm anticipating to watch that number continue to fall through the end of the year, and those values will start to come up because they're kind of going to be the last thing out there that people have an opportunity to buy going into this end of the year tax season, type of deal, or, upgrading something. That's what's going to be available, our combines. And I'm anticipating to see that supply drop way down and those prices start to come back up around December through, February.
So then on this little bit of inventory that we have out there, Casey, who are the sellers? Who is actually selling equipment right now?
Well, obviously the dealers have a lot of influence in that, but you're starting to see more and more, farm to farm transactions than we've seen in a very long time. And you're starting to see more, like a middleman of sort, like an equipment jockey type person that's kind of involved in some of those things. But a lot of that stuff is just going from farm to farm, whether it's with a dealer or not. All that being said, I've got a lot of friends in this business, and all the way from the Southeast to the Northwest, and there's a lot of guys that got the first, second, and third, and even the fourth trade sold. In some cases, they're just waiting for the new one to get there. So I kind of equate it to, you have $1,500 in your savings account, and you have $1,495 that you're going to go out and pay in your bill, pay bills with or whatever, and you get paid $1,500 every week, but you still have that same $1,495 going out. You're trying to rebuild that $1,500 with $5 at a time, each week. And that's kind of where we're at with this market right now, is that all the stuff that's coming in is already overwhelmingly sold, but for the most part, it's 3 or 4 machines deep. So it's going to be hard to kind of grow that back up and catch back up. I can see this happening for 2 or 3 years, where we have this kind of demand in equipment, just because even if the manufacturers get to full steam, there's just so much lag out there of that next piece of used equipment going out there and watching that stuff grow. And the relative nature of normal hours of use for a piece of equipment, I'm watching that as well, because what used to be 500 hours might be 750 hours now, or what used to be 1,500 hours might be 1,750 hours or 2,000 hours, because of the availability and what that looks like. So there's a lot of moving parts here that I think aren't being considered when you start looking at the big picture of what this problem looks like and how long it could last.
Interesting. Yeah, that's a lot more analysis than I was expecting, but let's turn this to the land side, Dave. Who are the sellers of all this land coming to market?
So what I am seeing is most of the sellers are either estates. So kids are becoming more removed from farms, Tanner. And we have third generation kids that their parents owned a farm in Iowa somewhere. They moved to Florida or Missouri or New York, and they became an attorney. And they knew Grandpa had a John Deere tractor, but they don't know anything about the farm. Grandma or Grandpa passes away, so realize that 82% of farms in Iowa are owned free and clear. Okay, so first of all, everybody's kind of paid for on those farms. And then of that demographic, I sat through a seminar the other day with Farm Credit Services, and they said that Iowa State was telling them, so we're going to pay it to Iowa State actually, that the average landowner is about 79. So a lot of land is going to move to these people that are passing away, and when they do, they've been cash renting it out to the neighbor farmer.
Right.
So now it either goes to farm management or it goes to sell, and so that's where some of these sellers are coming from. The other big demographic that I'm seeing is guys that are trading land. So I own a farm in Carroll County, Iowa, but there's one that comes up next to me in Story County, Iowa. I'd rather have it. It's closer to home. So they're using it as trading stock. So the bigger operators are buying land as trading stock, just like equipment. They might trade this for that down the road because they would just keep it there and keep their money without having to pay taxes, utilizing 1031.
Nice. So staying on the land side, Dave, let's talk about where the prices are at, because we know that equipment's high, but we haven't hit yet on what you've been seeing for record-setting land sales.
So record setting, I heard a $39,000 sale today.
Jeez.
This morning, per acre, that is.
That's in Iowa?
That's in Iowa. Now, I do believe that was going for investment and it was for commercial, but some of the farmland is being bought as transitional land, hedging towards the future, and people are pulling money from the stock market that they've made money and hedging towards inflation. And so they're buying commercial, or what they think will be a 10-year commercial development project or a 20-year. The highest land that I'm going to quote out there, 26,000 was 3 weeks ago that we saw. And Johnson County, Iowa, they also had a tract that sold that day for 21. One went to a potential developer, but the other one at 21,000 went to a farmer. There was one that was in the state in Grundy County, sold for 22,600 an acre. Now, that's the one that got publicized really big. But what everybody doesn't realize is there was other investment income. Most wind turbines pay about $7,500. That wind turbine on that farm particularly paid over $21,000.
Whoa.
So let's talk about just cap rates and what the rate of return on investment is. If you have the money and you invest in this, that one was already paying $350 per acre just in the wind turbine. Now it's in seed corn country, so maybe we get $380, $400 cash rent. So now we got almost $800 in cash rent before we start. So is it arguably worth more than the neighbor farm that doesn't have a wind turbine?
Yeah.
Definitely it does. So our averages, Tanner, for the state so far, this is just 2021, across the state of Iowa, good ground, bad ground, hunting ground, all ground, $10,406 per acre.
And what type of an increase is that year over year?
And that is up about 26.6%. And where I get that number from, I'm the president-elect for the Realtor Land Institute. We come up with a survey every 6 months, and that just was published about 3 weeks ago. 26.6% year to year.
So is it still split between investors and farmers, or who are you seeing buying this?
Good question. So I go to the bankers. I go to you on this because you guys know who you're lending money to. So what I see and what I want to call them is farmers, but some of them might be investors as well, and they don't necessarily tell me that. But Farm Credit Services of America came up with this data. Dave Knuth gave me a presentation. And in 2021, 79% are farmers or ranchers. Local investors are 12%. Out-of-area investors are 6%. 1031, they say, are only 2%, which I think is arguably way low.
Wow.
And then 1% they have in another category. But I would echo about 80-20. 80% landowners and local farmers, 20% are going to be investors. Now, let me argue, what is an investor?
That's true. That's true.
So
is a retiring farmer an investor?
Correct. If they're not actively farming, are they just now buying more farm ground?
Or nearing retirement, are they still an investor?
So that's up to the eye of the beholder. I know very large operators that I'm going to say they're buying it for trading stock. Well, they're just investing in it for future gain down the road.
Right.
So however you want to term that, actual investors that do not farm actively and were not farmers in a previous life, probably that 12%.
Okay, Casey. Now, I don't know if this has ever happened, or maybe that's what dealers do. Are there investors that buy equipment?
Well, I think that's probably, to some extent, that's kind of what an equipment jockey would be. They're buying a piece of equipment, the idea that they're going to sell it for a profit. So they're not a dealer where they've got service people and those kind of things for the most part. Some do, some don't, but not really. I wouldn't say there's, someone on Wall Street buying, taking some money out of an investment and putting it in a combine, which I'd have to question their sanity if they did something like that. But it's one of those things. I think it's primarily just a market-based transaction more than anything. But I will say this, to echo the point on the estate sales, a lot of guys are retiring now, and there is getting to be a lot more equipment out there on those retirement and estate sales too. So a lot of machinery is getting pushed through those channels as well.
I just didn't know if there was a way to go about that. I think you classified that as accurate as possible. I didn't even consider the jockey as an investor, but clearly they're trying to buy low, sell high. It would be kind of dangerous to all of a sudden identify the class of 9770 John Deere combines as an inflationary product. I'm going to grab a fleet of 50 of those and hold them for 2 years and sell them in the future. Maybe it'd be these new X9 combines because you don't think we're going to get them made down the road. So that would be pretty speculative. It'd be interesting to see if anybody has a take on that.
The only thing I could get off of that is maybe they get the depreciation schedule. So if they're making money elsewhere and they need the depreciable assets, so the larger you get, you might need to buy that new stuff just to save money in taxes as depreciable income. But as I've always known it, equipment depreciates and real estate seems to appreciate.
Right. So that'd be a different scam between your investor, because your investor wouldn't be able to take the depreciation unless they're actively farming. So they'd have to make sure they were going that route through that engagement.
And I think Section 179 too plays into that on the equipment side of the business a lot too, where that first year depreciation on most equipment is taken up front in a lot of situations just to offset some of the profits that we're seeing right now. Did see that kind of bottom a little bit in 2014, 15, where guys took that first year depreciation and then didn't have anything else in depreciation schedule because cost to trade was high and they didn't have anything else to supplement back into that depreciation schedule.
That makes sense. So, Casey, what advice would you have to our listeners if they are trying to buy something right now?
It is definitely it's a seller's market right now. And it's one of those things where if you find what you want and you are in the position to make that purchase and you're ready to move forward with it, it's something that you need on your farm or need to update or whatever that is, don't hesitate, because if you don't buy it, there's 22 people behind you that are going to. So don't drag your feet. Be ready to make that purchase when you see it, especially now with interest rates like you talked about earlier. I mean, they're as low as they've been. Some of that technology on some of these machines can really make a difference in the way that you farm. I mean, it's from efficiency standpoints and those kind of things. So take all that kind of stuff in consideration. But if you're ready to move forward on a piece of equipment, you found the one you want, you better buy it, because it probably won't be there in a week.
I was talking to Corey over lunch the other day, and he said this is where manufacturers like to be. They like to know that the demand is there before the piece of equipment is produced. I was talking to him about lawnmowers. You can't order you can order a brand new lawnmower. You can't hardly walk in anywhere and buy one. But they love that. I mean, yes, they would like to sell more and get them to the final holder sooner, but it's really nice knowing that everything that comes off the end of that line is sold. So right now we're just-in-time manufacturing on accident more than a purpose and a strategy. But Dave, switching to the land side, what is your advice to the buyers if someone's looking to try and grab a hold of a piece of ground?
So buyer side advice would be very similar to Casey. And a lot of times where this comes up is before they call me as an auctioneer or a realtor, they go to the tenant. And whoever's selling the farm, hey, you've been a good tenant, Tanner. We're thinking about selling the farm. What would you think about buying it? At that point, you, the buyer, or oftentimes the tenant, have first option, first right before they even take it public and no one else knows. And I would fire immediately, and I would get a purchase agreement as fast as you can. But also don't shortchange the seller on price, because arguably they're probably talking with a guy like me that has some data. So you're like, oh, it's been tough farming. I'll give you $9,000 an acre when it's worth 15. You're going to get outsourced really quick.
Yeah.
So make sure you come and give an offer that is not shortcutting your seller, and be honest with them and take the gulp and buy it at that rate. Because otherwise, if it goes to auction, which is what I would tell all the sellers. So if you're asking me advice for the seller, don't sell it short. Don't sell it to the tenant. I would say take it to auction and come up with true price discovery.
That's where I was going to go next. You're right. And I was going to go the route on the equipment side. So you just covered the land side. Casey, on the equipment side, I know you're probably going to say, well, it's a seller's market right now. You can't hardly do anything wrong. But as our listeners are going to learn in our next show, we picked up on a concept of taking it from good to great. What could a seller do right now to make their sales price go from good to great to maximize the value of their asset?
I think transparency in the marketplace is that one thing that drives price. If somebody's buying a used tractor or a combine or whatever it is, having those shop bills that are around to show what you've done to it over the course of that time, showing that it's been well maintained, the maintenance has been done on it, you fixed what needs to be done, you've hit those service intervals like you're supposed to, it looks good, it's not all faded, it just, didn't live under the big blue shed its whole life, it was inside of a shop. All those kind of things are going to be stuff that really drives somebody to have that comfort level to spend, $250,000 on a piece of equipment. Those kind of things are going to be what kind of puts that at ease when you start looking at that next purchase. Because right now, there's a million machines out there that have a $250,000 price tag on them, and they have varying ranges of, 1 through 10 scale. And there's 3 people on this call right now, and I could tell you all three of us have a different version of what a 6 is.
Yep.
And, so those things all play into that. So I think the more of that transparency that you can have with your buyer is going to help solidify what that price is. And also, there's a lot of extended warranty companies out there and those kind of things. If you have that kind of stuff on your machine, man, make sure everybody knows about that, because there again, it's not getting any cheaper to take the stuff to the shop to get worked on.
I'd echo what Casey's saying. If you remember back to when we talked with Machinery Pete, he said, tell the story. And he was seeing higher prices when people told the story. So you're just what you're saying, Casey, transparency. If we tell the story that, hey, this was Grandpa's, we've always used it, we've maintenanced it here, we did it here, did it there. Tanner, I'm seeing the same in farmland. So now as we transition to farmland and sellers, I already said arguably go to auction, but let me take another step on that. And the other step is tell the story. So I try to tell all the story of who it was, because this is the family farm and there's never more emotion than farmland. I'm going to make that argument all day long.
Yep.
There's more emotion in farmland than any other asset I've ever sold. But with that emotion of the kids who maybe get the benefit of it or the beneficiaries, make sure you're working with farmland professional. Even if it's not me, make sure it's with somebody getting advice, because that market is changing so fast. We talked about how many acres were hitting the market. We were only at 30 auctions per month 6 months ago, and now we're at 167 auctions per month. So that market changed in 6 months, like about 18.8%. That's a number that you don't want to leave on the table, and you better be talking with somebody who knows the market.
I liked it. Okay, gentlemen, I'm going to go with Casey first. I'm going to put you on the spot. The last question I have before we wrap up is, what's your prediction for 2022? What do you think the equipment market's going to look like going forward?
I think it's going to get tighter. I really do. I don't foresee anything out there that's saying that anything is going to lighten up. Kind of goes back to my earlier statement. I mean, even if you came on to full production right now, we would have a hard time having any kind of stock to sell from. So I don't see 22 being any different than 21. And to be honest with you, I kind of see it being probably a little bit worse than 21 is as far as supply goes.
That's not good news. Dave, what do you got?
Well, I am walking kind of a medium line, because my gut says that high prices cure high prices is the adage I've always heard. And so we have highest farmland prices I've ever seen in my lifetime. So high prices cure high prices. We think it's going to come down. There's a lot of people waiting for the bubble to pop. But then I look at the sources of Farm Credit or USDA and look at 10-year averages on farmland, Tanner. Like 37, 40% increase in what we've done. So I go back to the old boy, Jude Johnson was his name. When I bought my farm, I paid $3,800 an acre. And he says, you are the craziest son of a gun I have ever seen. It will never pay for itself. You will never make your money back. You are not going to make a return. You're the dumbest son of a gun. And today, now we have farmland prices selling for 20-some thousand an acre. Crazy, with averages at 12 on the high end. So, have a perspective of 10, 15 years down there. So my prediction is, don't have a short memory. Have a long memory. And if you long memory of what is it going to be, or a long forward thought, now I'm bullish. And I'm saying prices are going to continue to rise. Yeah. So they're going to continue to rise. I don't know if they're going to rise at 30% aggressively, but they are going to keep trending upward. And the main reason that I make this statement is because there's a lot of money in the outliers. When everything's paid for, so different than the 80s. If you're listening to this and you lived through the 80s farm crisis, you're saying it's going to implode, it's going to bubble, when's it going to happen? You're thinking that, but we were leveraged different at the banks. We were leveraged different, and there wasn't as much money in the outliers. There's a lot of money in the outliers right now, and it's fueling it. And then I'm going to give you a nugget, carbon credits. I've heard nothing but carbon credits, and who's the two largest landowners we have now? Jeff Bezos is number 2, and Bill Gates. Bill Gates is number 1. Why would these two billionaires be investing in farmland? 1, because it's a good investment, and their advisors are telling them to. Okay. 2, they got a lot of money, they need to spend it. And 3, there's just all this buzz around it. I have no approach on carbon credits. We did a podcast on it, Tanner. It could change the landscape as we move forward. So there's people forecasting that. My forecast is bullish, but steady to increasing by about 3%.
Nice. Well, Casey, I'm going to get ready to try and summarize what we've done today, but we asked all of our guests our key question of 2021, and we're going to do the same for you. We're not going to let anybody off the hook. So out of the most successful people that you have met or you know, what do they all have in common? And while you think about that, Dave's going to give us a summary today on what we talked about, and we will come back to that. So you got a couple seconds here, a couple minutes to think about that. What do the most successful people all have in common? Fire away, Dave.
And with that, of course, we're talking about a market wrap-up here. So I'm wrapping up our market wrap-up. We talked with Casey Seymour of Moving Iron Podcast, and he talked about equipment and how there's a lack thereof. So there is no equipment on the market, and it's just supply and demand. He gave us suggestions. If you're going to buy, make sure you buy it at this price right now, that prices have increased and they are higher, and that some of the bigger, newer, shinier stuff is harder to get. Some of that's a chip demand. Some of that's just demand that the dealers are telling him out to 2022. He's thinking and predicting that equipment prices are still going to be strong. And so maybe put a few more hours on your equipment. So rather than 500 hours in trade, move it to 700 hours in trade. So be thinking of that. Think of repurposing your equipment. Maybe buy old dumb planners and make them smart planners. Make them into like your smartphone and add the attachments to it. So get creative in ways to do that. He talked about potential positives in the market being low interest rates, 179 deduction, tax exclusions that you can do, and what is driving that market. And then he talked about any negatives, and the negatives is more just the supply, and that we don't have that. If we move forward to farmland, we kind of echoed the same story that I told you, Tanner, and that is it's hotter than a $2 pistol right now. It's the hottest land market I've seen in my career, and land prices are at new record highs. And that's not just me saying that. Iowa State's saying that. The USDA, the Federal Reserve is saying that. They're up all double digits. Realtor Land Institute is saying that. The Realtor Association, as well as David Whitaker, the land guy. So we're up considerably year to year, 26%. And we're seeing different people come into that market. Some are hedging against inflation. But as we talked about, it's kind of been the perfect storm. Moving forward, what do we do with it? I gave you the advice, make sure that you're bullish as well. I'm a little bullish on it. So make those smart decisions in what you need to do to move forward, because they are not making any more of it. Land is a commodity that you are only going to be able to probably buy once in your lifetime, and someone else is going to own it for the rest of your lifetime. So if it comes up and you want it, just like Casey said, it's time to buy.
Good. So Casey, was that enough of a stutter there for you to come up with your answer for what most successful people all have in common?
Yeah, I think so. I think for me, the most successful people that I'm around are two things. One, they're avid readers. They really pay attention to what's going on. Then, going on the news and those kind of things, but they're also reading, whether it's leadership books or whatever it might be. They're reading those different things and kind of opening their perspectives to different avenues and what they would normally think and see. So to me, it's people that have a broad-based opinion of the world and not just their little neck of the woods. So being open-minded are the most successful people that I know.
I like that. And Dave, we did frame you up as one of the experts on this show, so you're not going to get off scot-free either. What do you think the most successful people have in common?
This one's easy. They listen to Farm4Profit podcast.
Oh, jeez. What about the Moving Iron podcast?
Oh, that one too.
Yeah, there you go. So before I challenge our listeners, Casey, geez, you were ready. That was canned. Before we let you go and before I challenge our listeners, what is a good way for people to get a hold of you if they have questions, and where can they find your podcast?
You can find my podcast anywhere you find podcasts, Apple Podcasts, Google, wherever you find podcasts, it's all over the place. I'm on Facebook, Twitter, and Instagram, the big three there. But if you really want to get a hold of me directly, just go to Moving Iron Podcast and movingironpodcast.com and shoot me an email. I'd be happy to answer whatever questions you got or whatever you need from me. I'm happy to share what I know.
Awesome. And the challenge that I've got for you listeners is to start thinking about opposites. So if right now it is a seller's market, you need to be the seller. Don't be out there buying. Try and look at what you've got. So maybe it's a 65-acre piece. It's got some terraces in it, and it's really a pain to farm. And it's a painful theory to think about selling farm ground, period. But could you maximize the value of that asset by liquidating it and injecting that cash somewhere else. Maybe you have enough cash already and you're in a buying position and this doesn't help you. But think about that. Are there some underutilized assets that you're never going to get more for than what we could get today? Same thing on the equipment side. Are you holding on to that old 12-row planter? Are you holding on to a piece of equipment that doesn't get used very often that might right now not be worth any more than it ever has been? So that's my challenge, is be thinking about it. If it's a seller's market, let's be a seller. Even though you might be looking for something else, what do we have that we could take advantage of right now? So listeners, we're going to take advantage of the opportunity of having you listening to us. Please send us your ideas. Don't forget about rating, liking, reviewing, and sharing this podcast. Send everything to farm4profitllc@gmail.com so that way we can keep answering the questions that you put out so we know exactly what you're looking for as far as content goes. But again, as we always say, we thank you for lending your ears to us. And until next time, have a good one.
Remember, if you aren't farming for profit, you won't be farming for long.